that then. Let's let this load up a sec. Okay, so today I went long and I closed at break even for, well, it wasn't really break even, it was like basically break even. It was minus 3 pips, minus £4.40 something. So reason being, my original idea was wrong. I followed the model and I identified why my trade had been invalidated and why it wouldn't go to the previous daily high whilst I was in the trade, which is helpful. And I think that's actually quite a good spot from me compared to previous, where I would just be unaware of if price is going to go in that direction completely. And so let me get into this. There's a lot going on here. Let's just zoom out. We've got this hourly fair value gap down here, which I hadn't. Well, I spotted it a bit later on. To be honest, my entry was it was quite rushed around the time it happened, and it was in between the end of the London session coming into the New York Open. So it was a bit consolidatory. Less volatility in the market at my entry. So we were just sort of sitting around for a bit. I believe I was in this trade for about an hour and 10 minutes before I decided to close. So what do we have? We got this 1 hour fair value gap. I think that's also 4 hour imbalance. Yeah, you can see. So the initial thought was, right, we tapped it once, come up, and da. But yeah, I think the higher time frame were definitely a bit more bearish. As you can see, price has now come down. So in terms of other draws on liquidity, I was looking at previous daily high being the main one with this above. And I was looking originally, I think, at this range. Yeah, so I just realized they're equal highs as well. So this was kind of what I was looking at, bottom of London low and then the high of this range. Optimal trade entry is here. So I was thinking, right, that's cool. But I was also looking at, if we flip this, what would the range be if reversed? And as you can see, the optimal trade entry is right in this 30-minute fair value gap. Price had already traded up, and I was thinking, shit, all right, well, it's not quite hit the optimal trade entry, but it's still valid for it to come down here. And in terms of my model, there's a lot going on, but 5-minute inverse, fair value gap, breaker structure or market structure shift was, I was looking at this here, but bear in mind, I was also looking at like the bearish sentiment this week and over the last few days that we've seen in the market. A bit of just sort of easing off after touching the latest all-time high. And I think we're selling off a little bit now. So, right, in terms of my entry, I got in on this 5-minute retracement on the fair value gap. Was it 5 minute? Was it 3? Was it 15? It was the 15-minute. I took this entry here. Traded down, and then we come back up a little bit. I did also note that there's so much going on the screen. Oh, where is it then? Right, okay, so I'm having one now. Yeah, so we had the 30-minute fair value gap there. Let me just zoom in on that, that's better. Right, so I went in off this entry. Price then created like an inverse fair value gap on the 1 hour. We had a 30-minute fair value gap here. Pretty much, I closed my trade once it came up into break even because I was anticipating that price would come off this and then trade down. Why did I think that was going to happen? Well, I was looking at pretty much how the fib is set up now. I was thinking, you know, prices come up here and we've got a higher time frame draw down here on the 0.5 standard deviation. Pretty likely that's also a scenario that could happen, especially because that's more what the higher time frame is doing. So yeah, I closed for a very, very minimal loss, £4.44, compared to, you know, what would it have been? I think it was like £187 stop loss. It was 20 units, 2.28, yeah. So 140 quid stop loss. That was my risk to reward, 2 to 1 pretty much. And, you know, a £4.40 loss compared to 143 loss is no problem with that. So from that, pretty much just after I closed, we had this big candle wicked up here into the optimal trade entry and then came straight back down again on the 5 minute. As you can see, I think on a lower time frame we may have inversed. Yeah, so we got this inverse in here, trade up into it, and it was just sort of a bit, you know, not amazing today. I was waiting. I was also thinking, you know, we got CPI at 8:30, which is right here on this candle. That's where we see the move up and then down, and then market open, price just does a complete whipsaw move. If I'd stayed in, stop loss wouldn't have been tapped. We had it just below this 5 minute inverse in the London session. It doesn't look like that on the 3 minute, but it's 5 minute, as you can see there. So yeah, if I was in the trade, would I have held that all the way down, or would I have just let it go, you know? And then it just kept like whipping back up the other way and coming back down again, going up to 10 o'clock. But we look at the 10 o'clock candle, we got a big move up here, and then that would have, what did that take? I think it took this high or created the equal high here. And then, yeah, we just continued to move down, going towards 11 o'clock. And then on the 11 o'clock candle, you see that take place. So, yeah, it's a bit of an odd one today. But, you know, overall, I'm not mad about the loss. Very minimal. Managed the risk. Granted, I could have taken a little bit of profit if I just held for a few more minutes at least. So for example, this first move up, you know, we could have bagged maybe about 60 quid, and then if we were to get it right at the top, that would have been just shy of 200. But you know, I wasn't really happy with the risk. Once I'd identified this new range here and I'd flipped it bearish, the fib, because that confirmed to me that this was more likely to play down. And I didn't go short today because I already closed one trade. There's a potential chance that my model does play out here, but I've already closed one trade, so I don't need to go back in again. Just step away for the day, take the loss and come back. And yeah, I mean, ultimately, if we swap this fib round again, let's reverse that. Is it more likely that price is going to come up here, or is it going to go and fill this imbalance down here? I mean, we look at the 4 hour chart, not so much. I'd be more, I would expect more that price will come down, and surely enough it has. So, yeah, like I say, overall, 3 pip loss today. It's nothing, absolutely nothing, and we'll live to trade another day. Can't remember if we've got any news tomorrow. I know that there is some stuff on Thursday, and then Friday I'm not going to touch the markets because I'm busy. But yeah, we'll have a look tomorrow, see what we can do, and yeah, I'll be back then.